Good evening, ladies and gentlemen. It's an absolute pleasure to welcome you to the second Africa platform. The South African Chamber of Commerce in America has involved a new leadership that has come in just over a year ago. And part of that mission was to really look at business from two focuses. A top-down approach in the sense of trying to connect leaders and our key leaders in South Africa with really their counterparts in America. CEOs speaking to CEOs, government and business leaders speaking to one another. And SACA is privileged to play a small role in working to play a bridge in this dialogue. Because we do believe that we have world-class business leaders, and part of it is the removal of myths that may exist in developed markets, that Africa is incapable of developing world-class entrepreneurs with models that can scale internationally. We do have companies that are multinational companies, the Standard Banks, the SAB Millers, the Anglo-Americans, the BHP Bulletins, all of them with roots in there. And we're very proud of these companies. And we believe there's great value for people to be aware of that legacy and also the potential that South Africa has. And so we play this top-down approach of encouraging that dialogue and bringing that to the attention of people. Very importantly, we play a bottom-up approach, and we launched the Africa Entrepreneurship Platform at the Clinton Global Initiative, which is really about showcasing entrepreneurs doing things on the ground with models that can scale in international markets. Because again, we have great faith in the entrepreneurial spirit on the African continent. And again, we celebrate success stories in that. But it really is about unlocking values on both sides of the Atlantic. It's about job creation for Americans and South Africans. It's my great pleasure to introduce you to the CEO of the Standard Bank of South Africa, Mr. Simpiwe Tshabalala. Brief background, because we want to get him in front of this podium as quickly as possible. Mr. Tshabalala, who has been with Standard Bank since September 2000, was appointed Chief Executive, Standard Bank of South Africa in March 2008. Prior to this, he held various senior positions at the bank, including Chief Executive, Personal and Business Banking, South Africa, Deputy Managing Director, Retail Banking, and Managing Director of Stanbic Africa. It's a great privilege to welcome him to this stage to give us insight into exactly what is going on in financial services in South Africa at this point in time.
I want to talk to you about banking, not so much as an issue of debits and credits and all of those wonderful things, but as a human endeavor. I also would like to make reference, even if it's not directly, to the notion of Ubuntu. And my definition of Ubuntu is that it is the essence of humanity, is the living relation between individuals and their communities, individuals and the cosmos, and most importantly, individuals and their history. We at Standard Bank think of ourselves as stewards bequeathed a great bequest by our forebears with a duty to preserve it and nurture it and leave it in better shape than we found it for the benefit of future generations. That institution is 146 years old. Its birthday was on the 13th of October, just the other day. It was founded in Port Elizabeth, opened its first branch in Port Elizabeth, but was founded in the United Kingdom under the company laws of that country in October 1862 under the wonderful name of the Standard Bank of British South Africa Limited. It therefore has a colonial history, and I'd like to submit to you that we own that colonial history. And so this great institution of ours, operating in South Africa with assets of 178 billion rands, it is in the nature of a universal banking group of companies with insurance companies, retail banks, corporate and investment banks, and asset management companies in the same group. It is the largest by market capitalization of the financial institutions in South Africa and certainly on the African continent. It has got 648 branches in South Africa and 5,100 automatic teller machines. It operates in 20 countries outside the African continent and has got offices here in New York, and there are a couple of our colleagues from our offices here tonight. It has got operations in 18 countries on the African continent, inclusive of South Africa, and the head of that division is also here today, my dear friend Clive Tasker. In South Africa, we have got market shares in the retail bank to the extent of 36% in the credit card division, about 23% in vehicle and asset finance, and 30% in the home loans business. We dominate market shares in corporate and investment banking. And so in that sense, it is a leviathan in the South African market. It is true that this great profession of ours has been around for a long time. I'm sure when you hear of Babylon, you think of that wonderful psalm, that immensely moving piece of work that says, by the rivers of Babylon, there we sat down, yea, we wept when we remembered Zion. Perhaps you even remember it to the tune of Boney M, which will reflect your age. But it is worth remembering that that is where the first banks were formed 2,700 years ago. They took deposits, they advanced loans, they facilitated payments, they financed maritime trade. And one has to ask, well, what has changed today? They redistributed risk, they packaged it, they sold it on. Indeed, what has changed and what will change going forward? Furthermore, the 80 years between the defeat of Athens by Sparta during the Peloponnesian War and the death of Alexander the Great in 323 BC are fascinating, not just for the lover of antiquity, but for the banker who would seek solace in his great profession, even in these tough times. So the 4th century BC was a time of innovation. It saw two innovations. One was the transition of an economy governed by what Aristotle calls monetary acquisition, to one trading by social motivations, to an environment where you were simply trading for commercial purposes. And so the banking profession is facing a crisis today that can be described neither with irony nor with overzealous hyperbole as the most profound, not just since the 1930s, but even since 1907, the most profound crisis known to us in the last 100 years. There have been scores of financial crises since then, and no less than 70 in the last 20 years. But banks have endured, they've adapted, they've changed, and they've carried on, and they've existed. Like banks throughout the world, we intermediate between savers, people with access funds in the economy, and we advance those loans to deficit units in the economy. We create net cash flows by generating revenues arising from our deposits in the nature of loans which we advance, and these reflect, I guess, the heart of our deal making and the heart of our balance sheets. These give rise to net interest income. And net interest income reflects market risk, prepayment risk, and liquidity risk, and how well these are managed by our various institutions. A cost associated with that interest income is provisions for bad debts. And those bad debts or those provisions reflect the biggest risk that certainly banks in South Africa face, which is bad loans. In history, the biggest source of losses or the biggest source of failed banks has been bad loans. We also have non-interest revenue, which is associated with activities that are adjuncts to the traditional activity of taking deposits and advancing loans. And here we generate fees and commissions and trading revenues. Our shareholders care deeply about the net cash flows that we generate, and they care deeply about the risks that we generate. And the risks that we generate form the basis of the discount rates that they use to discount our net cash flows. And those risks are associated with our country risk, the risk of our country, which I do need to talk about for a minute or two, the market risk, as well as the risk in our own company. And so you then say, well, in those circumstances, what are the key challenges that are facing your financial institutions, having regard to these risks that you face that are so important for your shareholders?